something is very wrong. Right now, at this exact moment, the silver market is showing a pattern that has only appeared 4 times in the last 50 years. And every single time it appeared, what followed was a price explosion that made early investors extremely wealthy. But here is the disturbing part. The mainstream financial media is completely silent about it. They are talking about everything except this. And when you understand why they are staying quiet, you will never look at silver the same way again. In the next 12 minutes, I am going to show you exactly what the smart money is doing right now, why physical silver is disappearing from vaults faster than at any point in history, and the specific signal that tells you when the move is about to happen. This is not speculation. This is pattern recognition. And the pattern is screaming. Let me show you something that Wall Street does not want you to see. The gold to silver ratio right now is sitting at levels that have historically been the launching pad for silver's biggest moves. This ratio tells you how many ounces of silver it takes to buy 1 ounce of gold. And when this number gets extremely high, like it is right now, something interesting happens. Silver tends to outperform gold by a massive margin in the years that follow. We saw this in 1979 when silver went from $5 to $50 in less than 2 years. We saw it again in 2011 when silver quadrupled. And the current ratio is giving us that same signal. But here is the question that keeps me up at night. Why are the biggest institutional players quietly accumulating silver while telling retail investors to stay away? The answer to that question changes everything. And I promise you, by block 7 of this video, you will understand exactly what game is being played. Now let me give you some context that makes this even more interesting. Silver is not just a precious metal. It is an industrial metal on steroids. And the demand picture right now is unlike anything we have seen in recorded history. Every single solar panel requires silver. Every electric vehicle uses more silver than a traditional car. Every 5G tower, every smartphone, every medical device. Silver is everywhere. And here is the thing nobody is talking about. The green energy transition that governments around the world are pushing requires more silver than currently exists above ground. The International Energy Agency projects that solar panel demand alone will consume over 30% of current annual silver production by 2030. That is just one industry. Add in electronics, medicine, water purification, and you start to see a supply problem forming. But wait, if demand is exploding, why is the price not already at the moon? SFX, dramatic pause sound, this is where it gets really interesting. If this is already clicking for you, smash the like button because what comes next is going to blow your mind. Here is where I need you to pay close attention. Pause 2s, the silver market has a dirty secret. For every ounce of physical silver that exists in vaults, there are approximately 250 ounces of paper silver traded on exchanges. Let that sink in. 250 claims for every single real ounce. This is called the paper to physical ratio, and it is absolutely insane. Music shift, now imagine if even a small percentage of paper silver holders decided they wanted to take physical delivery. The entire system would collapse overnight. This is not conspiracy theory. This is published data from the COMEX exchange itself. And here is what most people miss. The big banks, the ones who trade this paper silver, are legally allowed to settle in cash instead of physical metal. So they can short silver all day long without ever owning a single ounce. But individual investors like you and me? We are playing by different rules entirely. This two-tier system is designed to suppress price discovery while smart money accumulates physical metal at artificially low prices. So let me connect these dots for you because this is where the picture gets clearer. You have exploding industrial demand. You have a paper market that is 250 times larger than physical supply. And you have a gold to silver ratio at historically extreme levels. These three factors have aligned exactly like this only a handful of times in the past century. But there is a fourth factor that makes this moment unique. And honestly, this is the one that made me completely rethink my own approach to precious metals. SFX, tension build, central banks around the world are printing money at a pace never before seen in human history. The dollar has lost over 97% of its purchasing power since the Federal Reserve was created in 1913. And silver? Silver has maintained purchasing power for over 5,000 years. A Roman soldier was paid about 1 ounce of silver per day. Today, a minimum wage worker earns roughly 1 ounce of silver per day. The ratio has held for millennia. But fiat currencies? They have a 100% failure rate throughout history. Every single one eventually goes to zero. But here is where I have to be completely honest with you. Everything I just told you? That was just the setup. SFX, dramatic sound, the real story is something far more urgent. Because while retail investors debate whether silver is a good investment, something unprecedented is happening in the physical market right now. Major mints are reporting delivery delays of 4 to 6 weeks. The US Mint suspended sales of silver eagles multiple times in the past 2 years. COMEX registered silver inventory has dropped by over 60% from its peak. And here is the part that should make every investor sit up straight. In early 2025, several major industrial users reported they could not source physical silver at any price for immediate delivery. Not because of cost. Because it simply was not available. The disconnect between paper price and physical reality has never been wider. This is not normal. This is not random market fluctuation. This is a system showing signs of stress. And if you have been watching this far, you understand why that matters. Subscribe now because in the next few minutes I am going to show you exactly how this plays out. Now let me show you what the smart money is actually doing, because this is where actions speak louder than words. Eric Sprott, the billionaire precious metals investor, has accumulated over $1 billion worth of silver positions. First Majestic Silver Corp CEO Keith Neumeyer has publicly stated he believes silver should trade at least $100 per ounce based on fundamentals. Multiple billionaires who made their fortunes in technology are now quietly building positions in silver miners and physical metal. But here is the twist. Pause twos, while these investors accumulate, the mainstream financial media barely mentions silver. When was the last time you saw a CNBC segment dedicated to silver investing? Compare that to the endless coverage of meme stocks and cryptocurrency speculation. This silence is not accidental. Large players need time to build positions without driving up prices. And the easiest way to do that is to keep retail investors distracted with flashier assets. Drop your prediction in the comments right now. What do you think silver will be trading at by the end of 2026? I want to see who figured out the pattern. And now I am going to answer the question I posed at the beginning. Why are institutions accumulating while telling retail to stay away? The answer is elegantly simple and deeply troubling. They need sellers. SFX, revelation sound, when a major institution wants to build $1 billion position in any asset, they cannot just walk in and buy. That would spike the price immediately. Instead, they need a constant supply of sellers willing to part with their holdings at current prices. And the easiest way to create sellers is to ensure the asset stays out of the mainstream conversation. No CNBC coverage means no retail FOMO. No retail FOMO means stable supply of physical metal from smaller holders who get bored or discouraged. Meanwhile, every month, the institutional players take delivery of more physical silver from COMEX vaults. This is the big reveal. The game is not about manipulating prices down forever. The game is about accumulating as much physical metal as possible before the inevitable repricing occurs. And when that repricing happens, the same institutions will suddenly become very bullish on silver. The retail investors who sold at low prices will be invited back in at much higher prices. This is how wealth transfers from the impatient to the patient. So what does all this mean for you? Look, I am not here to tell you to buy silver or not buy silver. That is your decision based on your own research and financial situation. But I am here to make sure you understand the game being played. Silver is not just a shiny metal. It is a monetary asset with 5,000 years of history, an industrial metal with exploding demand, and a market with structural imbalances that have historically resolved explosively. The gold-to-silver ratio, the paper market distortion, the physical supply stress, the institutional accumulation while maintaining media silence, these are all pieces of a puzzle. And when you step back and see the full picture, you realize we might be living through one of those rare moments where significant wealth can be built or protected by those who understand what is happening. The question is not whether silver will eventually reprice. History suggests it will. The question is whether you will be positioned before or after that happens. And that, my friend, is a question only you can answer. But at least now you have the information to make an informed decision. Now, before I let you go, there is one more thing I need to address. Because I know some of you are thinking, okay, but what about the risks? And honestly, I respect that skepticism. Silver has been called the devil's metal for a reason. It is volatile. It can drop 30% in a matter of weeks. Mining stocks can go to zero if companies are poorly managed. The paper market manipulation can persist longer than most investors can remain solvent. And timing? Timing is nearly impossible. People have been calling for a silver breakout for years and been wrong. These are real risks that anyone considering silver exposure must understand. The key is position sizing. Smart money does not go all in on any single asset. They build positions over time, buy physical metal they can hold for years, and size their exposure appropriately within a diversified portfolio. The people who get destroyed in silver are the ones who bet the farm at the top of a run or use leverage they cannot afford. Do not be that person. Be the patient accumulator who understands the long game. Here is something that might surprise you though. The biggest silver gains in history did not come from people who timed the bottom perfectly. They came from people who were positioned and patient. During the 1971 to 1980 silver bull market, the metal went from $1.40 to $50. That is a 35x return. But most of those gains came in the final 18 months of the run. People who sold at $5 because they had already tripled their money missed the explosion to $50. Same story in 2008 to 2011. Silver went from $9 to $50. The majority of gains came in the last phase. The lesson? In commodity bull markets, the early adopters who hold through consolidation periods are the ones who capture the life-changing gains. The traders who try to be cute and time every move usually end up selling before the real fireworks start. This is why understanding the fundamental setup matters more than watching daily price action. So let me leave you with this final thought. The silver market today is showing patterns that historically precede major repricing events. Industrial demand is at all-time highs and accelerating. Physical supply is under stress for the first time in decades. The paper market is leveraged at levels that have never been tested. And smart money is quietly accumulating while keeping retail investors distracted. None of this guarantees anything. Markets can stay irrational longer than you can stay liquid. But the setup is there. The pieces are in place. And for those with eyes to see it, this might be one of those rare opportunities where fundamental analysis actually points to where value is hiding in plain sight. The question is whether you will act on this information or scroll to the next video and forget about it by tomorrow. Either way, at least now you know what the unbanked minds see when they look at the silver market. And that knowledge alone puts you ahead of 99% of investors out there. Now you understand what most investors completely miss about silver. If this breakdown gave you a new perspective on precious metals, hit that subscribe button because we go deep on wealth building strategies that the mainstream ignores. And I want to hear from you. What is your biggest concern about the silver market right now? Drop it in the comments and let us discuss. Next week, we are diving into another asset class showing similar hidden patterns. You do not want to miss that one. Stay unbanked, stay informed, and I will see you in the next one.